I just did, Tanksimus. It's skewed because so they can't. Here's their routes for shorting, right? They need a pre-borrow agreement to borrow shares and use standard. This is, just standard shorting. Or they need to buy puts or use ETFs. So ETF creation, right? So these are the three methods of shorting they have available to them. This one sucks, right? We already know it spikes the borrow rate. They have to pre-locate. It's not ideal. I mean, they'll grab any shares they can get, but they're not going to get very many, right? There's just not a lot of liquidity in the lending pool, which is why, we see the borrow rate go from like over the last few days, we've seen it go from 25 to 90 to 35 to 46, right? It's all over the fucking place because liquidity in the standard borrow is very slim. So this leaves, since this is kind of shit and isn't going to help them much, they need to either buy puts or use ETF creation, right? And ETF creation on Upstart's not great because there aren't a lot of shares in ETFs. They can only really get like 1 million shares a day, right? Which isn't sufficient to suppress price and volatility. It's a little more than 1 million, but it's not a lot more. So that leaves them with buying puts, right? And so they buy shitloads of these with high delta. So delta above 0.5. Hold on. Let me write that properly. Delta greater than 0.5, right? And what this does is this skews the price of calls. So the price of calls drops because put interest is so high. And the more that put call parity shifts, the cheaper calls get. And this is something that sort of happened with BBBY as they were shorting so hard that calls became very inexpensive, right? Which allowed longs to get massive amounts of leverage to the upside. Large leverage for very little money. For little money. Right? And so when the price does move up, right? Say the synthetic shorts cover, then that means when they start running the stock out of the money, there's this massive amount of call leverage that needs to be hedged, right? And that precipitates lots and lots and lots of upward price movement and volatility. We're all on the same page now? Everyone got that? Calls on Upstart are so cheap because the bar rate is astronomical. Well, yeah, the risk-free rate factors into that as well. The bar rate dropped a little. It's like down half from Monday. I assume you mean the prime bar rate. Okay. The prime borrow rate above 10% is fucking crazy, JFresh. Just so you know, like what you're looking at. That's